0.
Pleasant day and welcome to our webinar on remittances and inclusive economic growth for migrants, families, and their communities in the digital age. Organized by the UP-CIFAL in collaboration with the UN Institute for Training and Research, or UNITAR, and the Philippine Migration Research Network, or the PMRN, this webinar seeks to explore the essentiality of creating an ecosystem in the community and country to foster, mediate, and encourage remittances for inclusive economic growth and sustainable development wherein no one is left behind. Despite the global economic recession triggered by the ongoing pandemic, overseas Filipinos in 2021 sent home a staggering US $31.4 billion in cash remittances, which shows the resiliency of our diaspora. Migration and remittances also play a crucial role in the achievement of sustainable development and the SDGs when harnessed in a productive way. For the next hour and a half, we will be hearing from our subject matter experts on elevating remittances for inclusive growth, the challenges of digital remittance channels, as well as how to promote financial inclusion in the digital age. I'm Rodrigo Garcia Jr., and I will be your moderator for today's webinar. We are broadcasting live in the Facebook page of UNITAR as well, so shout out to our viewers out there. To give us an opening message, let us all welcome the Honorable Alfredo Pascual, the President of the Management Association of the Philippines and former President of the University of the Philippines. He also serves on the board of several nonprofits such as UP-CIFAL. Sir, you have the floor.
Thank you. My warmest greetings to our distinguished guests, experts, partners, scholars, students, ladies and gentlemen. I'd like to begin my remarks with two stories. Consider a typical day for a rural woman in Kenya, Africa. On this day, the woman intends to do errands, including shopping at the local market. She needs cash, but doesn't have it on hand. She has money in the bank, but to go to the bank would take several days. So the woman gets hold of her mobile phone, enters a password, and requests for a cash withdrawal. Soon after, a man with a mobile phone arrives and hands her the money withdrawn. Then she leaves home to do her errands for the day, and when she has completed the errands, she spends the remaining time managing a growing home-based business. This enterprise contributes to the household's living expenses, preventing their family from falling into poverty. Such is the phenomenon of mobile money in Kenya. People, particularly the poor among them, have seen a measure of liberation from the demands of doing finance through mobile banking and being at the same time part of the formal financial system, but with no long travels to the banks, especially if you're in the rural areas, no esoteric bank forms, no complicated rules, no direct dealings with sophisticated bank personnel. Our Kenyan woman's household gains more freedom and more time to devote to productive endeavors that can better their lives. Millions of Kenyans have been lifted out of poverty thanks to mobile money. This is an example of how the ongoing wave of digitalization is changing how people live and work. With digitalization comes the promise of financial inclusion and the possibility of participating in inclusive development. Those at the margins no longer have to hide their hard-earned money in the back of closets or under beds, leaving them exposed and vulnerable. They no longer need to carry them on their person, thereby preventing exposing themselves to danger from shady elements. They can keep their money safely in banks and have the opportunity to save for the future or for current investments, borrow for a business venture, and get insurance against risks. This brings me to my second story, which I'm sure you're all familiar with. Thanks to our overseas Filipino workers' hard work and generosity, now more than 30 billion in cash remittances are sent home to the Philippines yearly, and the amount is increasing. We all know that these remittances are highly beneficial to families and households that receive them, the communities in which their peso equivalent is spent, and the economy that needs foreign exchange for imports of raw materials, capital goods, services, and others. These remittances have also helped small farmers and family businesses. They have lifted migrants and their families out of poverty, in most cases, I would add. They have given them the ability to make decisions about their health, education, and nutrition, as well as their overall quality of life. They play an important role in realizing our vision of a prosperous and progressive Philippines. But the big question remains, are we able to maximize the benefits from these remittances? Benefits for the recipient families, benefits for our country's socio-economic development. I see today's webinar as an intersection of these two narratives. On the one hand, there is a progressive application of digital technology to payment and banking systems, and the promise this development brings for greater financial inclusion, particularly of the poor. At the same time, we have the ongoing challenge of harnessing OFW remittances to financially empower the recipient families and accelerate the country's inclusive development. The ideal progression is towards a convergence of these two narratives. How far have the OFW families and their communities have moved in that direction? Where will the interaction of digitalization and remittances possibly take them next? The COVID-19 pandemic has required social distancing and restricted mobility, devastating businesses, killing jobs, and strangling communities in various parts of the world, including the Philippines. However, the acceleration of digital transformation and development of cashless payment systems have provided feasible and ready solutions to sustain commercial and office operations in the midst of the pandemic. Digital channels have facilitated the flow of remittances into the formal financial system to help keep our country afloat. After all, the OFW remittances defied pessimistic projections of a steep decline. Remittances are keeping close to 10% of Philippine GDP. Surely, cashless transactions have helped keep our community safe and healthy. This eliminates the need for people to go out in public, that will increase their chances of infection. The convergence of remittance flows and digital payment and banking systems is our aspiration for the sake of the families of OFWs, their communities, and the country as a whole. To say the least, the relationship between remittances and financial inclusion is complex. Many studies have emerged and continue to be done, examining the development outcomes of the combination of these two streams of development. However, one common key takeaway, which is good, from this growing body of research is that high remittance flows and financially inclusive environment are beneficial to the economy and to our development goals. And as we saw in the case of Kenya, digitalization may very well become a gateway for many to access financial services and eventually achieve a financially inclusive society. By bringing a larger share of the remittance recipients into contact with the formal financial system, by converting the unbanked among them into the banked part of our population, they can save even more on transaction costs and grow their savings with formal financial institutions with lower risk of loss. By increasing their savings, they also broaden the range of financial products available to them. These same products can help boost economic growth by funding substantial and meaningful businesses. Or the savings from remittances can give a boost to capital formation of the country, our country. Clearly, there are a lot of options for development all around, with the remittances as the fuel and the driver, and facilitated by digital transformation. I wish the speakers and participants in this webinar an invigorating and productive discussion. Thank you.
Thank you very much, Sir Alfredo, for your opening remarks. Indeed, we thank you for sharing those stories from Kenya and the Philippines and how technology is playing a critical role for our migrants. Technology is changing the landscape of personal finance, remittances, as well as entrepreneurship. But the challenge remains as well of how to ensure that technology facilitates an efficient remittance by way of, for example, keeping the cost of sending farther down the cost of remittance. So thank you very much, sir, for your opening remarks. We now proceed with the discussion proper. The role of remittances in improving family welfare is generally acknowledged as a positive outcome of international migration. While there are reported cases of abandonment, overall, Filipinos religiously send remittances to their families back home. To share with us how to elevate remittances for inclusive growth and the sustainable development community, we are pleased to have with us Professor Jeremiah Piñano, who is also the Assistant Director of the University of Santo Tomas Research Center for Social Sciences and Education. He is also a steering committee member of the PMRN. Professor, glad you can join us. You have the floor. Thank you.
Can you see my screen?
Yes, we can clearly see it. If you can shift it to presentation mode. Thank you, sir.
Good afternoon, friends. We welcome everyone to this dialogue of how we can mobilize overseas remittances for development during this pandemic era. But I ask, what about migrants? I think we know already how to elevate remittances for, in current day language, inclusive growth and sustainable development. 6 migration scholars from various disciplines and countries said these contextual recommendations in the mid-1990s. Government policy should create a conducive environment to investment. And in terms of local development, get the local economic house in order. Whether national or local, the messages sound obvious and commonsensical. But let us look at the things ahead and the things we currently confront. Will the country keep steady, whoever gets elected? Will on and off lockdowns and now a global economic threat wrought by geopolitical conflicts keep us away from bouncing back? Will businesses worldwide continue to be knocked out, or will they rise up again and score knockout wins at this time? Will countries still wary at current and emerging variants and lineages of SARS-CoV-2 keep foreign workers out of their labor markets? Will Filipino workers seeking to make labor migration their passport to economic bounty, especially during these times, be able to return abroad? Or because of the droves of repatriations and return migrations, they will be kept in the dark? But wait a minute. No matter the odds abroad, overseas Filipinos still send and send money, surprisingly even more in 2021. Does this mean good news for all of us? Or does this mean that their efforts to sustain their remitting are at the cost of their overall well-being, just so that their families thrive and survive while they're still alive beside COVID-19? How do we make overseas remittances relevant for development? Well, says University of the Philippines political scientist Jorge Tigno, the Philippines, I quote, needs labor migration to weather through future economic crises, as well as to address the socio-economic issues caused by the pandemic, end quote. If that is the case, we should sustain efforts to, with emphasis, protect the overall well-being, the health, and the rights of overseas migrants. Then we can talk about the steps to make the remittances work for their and their communities' development. Because at the moment, with particular reference at least to pandemic hit returnee overseas Filipino workers, they have been pounded hard. What now for them? How will they accept this sudden lifestyle change of earning less and living by their means? Where to get the money? And if I am a family member here previously enjoying the bounty of dollar transmittals, should I pressure them to do all they can to send some more? The pandemic punched all of us out. Even Sri Lanka's economy got drubbed to the point that government called on overseas Sri Lankans to send more dollars home. We have all come to our senses. Overseas migration and remittances ain't a silver bullet. But while understanding prevailing scenarios and uncertainties, the Philippines will just have to continue the measures, including those measures and projects spanning decades, and some of which are funded by international groups in the previous decade, to make the overall environment for remittances productive use to be tools for overall Filipino recovery and for overseas Filipinos' social protection. This overall policy effort is nothing new. This remittances for development thrust is even planned, with a national development plan even devoting a separate chapter for these so-called modern-day heroes. So the Philippines already knows what to do. It's just that given today's over 1 million return migrations and repatriations, the policy pivot is upon us. Some remittances, no matter how little, are brought home. Other returnees did not bring home any. Their economic reintegration thus becomes a societal need, and now a whole of government approach. Yet we take note. You can't blame returnees if they still want to be stung by the overseas migration bug. Look at how I and an economist analyzed a survey of over 8,300 returnees done by the International Organization for Migration. We employed an inferential statistical test called logistic regression to determine probabilities of staying home or returning abroad. The consensus results, ladies and gentlemen, is that no matter the cash aid, the loans, the business training, and skills upgrading, returnees want to return abroad when given a chance. So hopefully, a forthcoming project between government and the United Nations family in the Philippines provides the varied pathways for successful, somewhat successful, and unsuccessful returnee overseas Filipinos to make their return migration fruitful. For the past 15 years or so, we have seen the explosion of savings and investment products and entrepreneurship for overseas Filipinos and their families. These products and projects continue to sow hope that Filipino remittances, big and small, get productively used. The question begs though, if remittance owners are skilled in handling money? That's the question. Regardless perhaps of the Philippine rural community and even the time that they were surveyed, which was what I and that economist colleague did in the past 9 years, learning money on your own does not necessarily lead to skilled and correct application of finance. Wherever overseas Filipinos and their families want to use their remittances productively, results differ, geographies differ, same phenomenon, different results. Like in Doctor Strange in the Multiverse of Madness, same Doctor Strange, but different universes. Let me share some findings from a doctoral project that implemented a tool called the Remittance Investment Climate Analysis in Rural Hometowns, or RICART. Our latest 2 communities are found in Ilocos Norte Province, San Nicolas, and in Tarlac Province, called Moncada. Look at the differences here. One town saw her overseas Filipinos invest more back home over the other. Interestingly, both communities are good governance places with progressive mayors. San Nicolas blends urbanization and rural life. Moncada is an agricultural powerhouse, especially for corn, rice, and sweet potato. Thus, their local governments make do with what they have, with the makeup of their communities and given their geography. Moncada is a first income class town, while San Nicolas is second income class, but sandwiched in the middle of 2 cities. Yet look at the data here. The smaller town of San Nicolas seems to be an economic giant over the other. And for the individual overseas Filipino, you want those trends to come out so that you know how far your investment can go. You also want your business and investment venture to be productive. And if this productive venture is situated in your hometown, you want to know if your hometown is near visible markets apart from your own. Look at these Geographic Information System or GIS maps here. You can get a sense that non-migrant and migrant hometown investors and entrepreneurs deal with differing markets and account for their geographies. These geographies have their distinct features. San Nicolas houses a big shopping mall complex, thus stimulating micro to small non-farming business activity. Moncada remains an agricultural powerhouse, though limited business spaces all but provide limits to expanding non-farming ventures beside an already expansive agricultural economy. Thus saying, utilizing remittances for development through inclusive growth and sustainable development, as the current language goes, in Philippine communities at least, operates as a process. This process does not merely involve remittance-owning migrant families. These families interface with financial institutions and then with community members and community institutions like the local government. Undergoing that process is fine, but let us remind ourselves once more, we remain stuck in a pandemic and businesses aching to bounce back still face visible realities. If you are an entrepreneur with or without overseas remittances, projecting profit margins today differs from doing the same before SARS-CoV-2 came to our lives. Thus saying, the specific task of luring remittances for development involves the human mind. This concern spans making the right decisions and how one's decision-making accounts for family, institutional, and community contexts. And once the decision is made, that alone is a risk. It is about endowing trust. Even if you know personally whom you are dealing with, just note what Oxford University's Rachel Botsman said about trust. Trust is a confident relationship with the unknown. Overseas migrants, prior to and during this pandemic, have been dealing with many unknowns, as various groups want to work with migrants through their remittances. To make remittances work for development, these remittance owners place their trust in us. We just have to prove how trustworthy we can be. Thank you very much and good afternoon.
Thank you very much, Professor Opeñano, for your presentation. And if I may add, aside from the need for a whole of government approach that you stated earlier, perhaps we need a whole of society approach as well, as all migration is local. Thank you very much, Professor, for sharing with us some of the findings from your previous study on RICARD and highlighting the two provinces in the northern part of our country's local experiences with remittance. So thank you very much, Professor. We now move on to the second topic. Our next speaker to talk about the problems and challenges for sustaining digital remittance channels in the Philippines is the Philippine Country Director of the UK-based global digital money transfer company, Remit. He has extensive banking and financial services experience with some of our country's biggest banks. Let us all welcome Mr. Earl Bilivo. Sir, you have the floor. Sir, kindly unmute, sir.
Hi, good afternoon. Thank you very much for having me today. Good morning or good afternoon or good evening to wherever you are at the moment. So thank you very much again for this opportunity, and hopefully we'll be able to share with you our insights on what has been the effects of the pandemic to our industry, which is obviously the remittance industry globally. And we'll be citing examples on the experiences of two countries who are amongst the top receiving nations for global inward remittances from migrants. In terms of discussion points, there are a few things that I'd like to highlight. First is we need to define what is digital remittance framework. What has the industry been and or is currently at the moment? Who are the legacies and disruptors? Of course, the digital shift and the pandemic. We'd also be able to discuss with you our experience as a country versus those of a relevant country as well, which is Mexico, amongst the top 5 receiving countries in the world. And lastly, we'll share with you the future and what we see in the current trends and the challenges and opportunities. So let me first define what is digital remittance. There are two sides of the coin. When it comes to digital remittances. It's both on the send side and also on the receive side. From the host countries, we define digital services such as those who are offering money transfer services via mobile or a website. On the digital side, when you send to a money transfer business like Remit, you can actually just download the app or go to our website. You can pay for your remittances through debit or credit cards. You can even send in some countries where it is allowed, such as in the US, wherein you can transfer to a nominated local bank account, obviously to pay for your remittance. And then obviously, because of the changing landscape, there are other alternative digital payment methods that are now in place and should be growing faster than ever. On the receive side, cash would still be very much relevant. Henceforth, cash-based payout services are still basically dominant in many host countries, but that is already changing because mobile wallets, bank deposits, and even digital assets transfers to these types of modalities are now increasing faster than ever. If you define what the propositions are for digital remittance services, we are basically low cost, which means we offer services that are have been influencing rather the overall cost of sending money, especially to developing countries. We're fast because we don't employ, at least most of us do not employ on the send side brick and mortar locations. So at the convenience of your palm, you can just download the app or access your website anytime, 24/7. And of course, the fourth pillar of digital remittances would be security. We cannot gain the trust of our customers if we're not able to secure the transfers that they're making through us. I just want to quickly show to you what the services are or for World Remit in the Philippines. So we do transfers to more than 100 banks to date. We do cash pickup as well, and send to mobile wallets, leading mobile wallets, and another auxiliary service, which is airtime top up. So this is quite typical amongst money service businesses on the send side.
Sir Earl, apologies for disrupting. Sir, can you
Sure.
enable slideshow so that our participants can
Sure.
view the text in your slide? Thank you, sir.
Sorry, no worries. Apologies. Let me know if you're able to see my screen. Better.
Thank you, sir.
All right. So let me define now what the industry is. As many of you know, it's a 700 billion industry annually, and that includes north to south and north to north transfers. But majority of that, about 74% for the past 10 years, are actually being sent to low and middle income countries. Again, these are migrant remittances being sent home. Although in 2020 we were able to see a decline, it wasn't as bad as many predicted. It was just 2.4%. Although we came from a 4 and 8% growth respectively in the past 2 years, nonetheless, that shows how resilient migrant remittances are, particularly in the Philippines, for example. We industry experts even predicted more than 10%, but we only recorded less than 1% in 2020, and obviously 2021 has been a recovery year for us, not just for Philippines but other receiving markets as well. And just to point out, these are the top 5 receiving countries, which includes India, China, Mexico, and Philippines, plus Egypt. Other sending countries are the usual suspects, mostly developed nations. But if we want to highlight things, which I'll be discussing later, we'll share with you the experience between Mexico and Philippines. But let me backtrack a bit, just to further define the industry. We have what we call the legacies. These are money transfer services that has been in the business for decades. And we also have the disruptors. These are primarily financial technology companies who are offering faster and way more efficient way of sending money. But please do not discount the fact that because of the changing landscape, even the incumbents or the legacies are actually or have been preparing for digital money transfer services. When we look at the effect of the COVID-19, it's just basically an acceleration tool or situation for the whole of industry. If we look at the digital shift itself, and pardon me for the words, many words in here, but as much as I'd like to put in the details here, I'd like to define the digital shift during the pandemic into 4 quadrants. On the send side, you have the sending money service businesses such as World Remit. On the another sending part of the sending side would be also the senders, obviously. And on the flip side, we also have receiving MSBs, and also obviously the recipients. So for sending money service businesses, we saw a general increase or rapid investments or improvements around their digital send channels. We have the traditional ones who immediately offered online remittance services or channels such as their own website and deploying them throughout their network. For the rest of the industry, including the disruptors, we're able to launch additional payout services. In the experience of World Remit, for example, during the early lockdowns back in March and in April of 2020, we were able to quickly launch sending to mobile wallets in the Philippines. It coincided, obviously, with the efforts of the receiving MSBs, wherein they were able to further build not just their customer base, but more importantly, the services that they offer and how they actually offer and try to reach out to their customers. On the sending MSB side, we saw a general decline in overall costs in sending money. It's now, at least in the case of Philippines, we now have below 5% in terms of the overall cost of sending, say, $200. That came from 6% pre-pandemic. Same goes with the likes of Mexico and India, all recording general decreases in overall cost in sending money back home. Obviously, with the lower cost or higher frequency of send, with the lower cost, we actually saw higher frequency of sending. In our experience, 2 or 3 years ago, we only saw about once or twice customers sending about once or twice a month. But now the general consensus is that they're sending actually at least even 3 times per month or even weekly, on a weekly basis. So we saw that the overall pandemic, if there would be any positive things that happened during this pandemic, we were able to see that the industry became more efficient, and it translated to more savings towards or for our migrant customers and their beneficiaries, obviously. And just to further to point out in this slide, in terms of the recipient side, we obviously saw that more and more consumers, particularly in the migrant sending countries like the Philippines, we saw that there were higher adoption or faster adoption to mobile wallets in particular, or even digital banks and other financial institutions basically launching their own digital channels, which is actually a very positive thing about servicing the entire population, or at least majority of it. So let me just highlight what happened during the earlier months of the pandemic. In cases of the traditional or the legacy MSPs, 4 years of growth in their digital channels actually just happened in 2 months. In our case, for fintechs and disruptors, we saw 150% year-on-year growth, which was phenomenal. When I first joined this industry, we only saw maximum of 30% growth in this space. But because of the pandemic, people actually shifted towards using our services. And now let me then describe to you what has been the experience of Philippines and Mexico. Just some statistics. Philippines, 35 billion annual inward remittances. Mexico, it's 51 billion. They are ranked 3rd. We're ranked 4th, respectively. And in terms of, as we all know, by percentage of GDP, we're closing around 10%. Mexico is about 4%. In terms of financial inclusion, we saw there's a glaring difference, which sees what has been experienced in the Philippines and that of Mexico. Mexico has 32% financial inclusion or percentage of adults with accounts, whilst 53% for the Philippines, particularly for 2021, it was because of the emergence of money or mobile wallet services, which generally is easier for us to sign up for. In terms of the send side experience or the challenges and the advantages, Philippines in general, based on our observation, at least about 25% of overseas Filipinos already use online remittance services. However, for the majority or the rest of overseas Filipinos, due to the unavailability of brick and mortar agent locations in many of those host countries, they were able to quickly use digital MSPs. Simply put, they didn't have any choice, really. But the good thing is, it was not just them who actually shifted. It was also those who provided those services. For example, in the Middle East, most of the exchange houses there, you need to go there physically to send your money. But now, many of these exchange houses, they have their own, or banks have their own digital sending channels. They even enable payments through debit cards, which wasn't really present for majority of their customers or the Middle East pre-pandemic. In terms of the experience of Mexico, on the other hand, since 95% of transfers to Mexico are coming from the US, those Mexicans who used to send through informal channels or delivering remittances themselves, for example, Mexicans working in the US but permanently residing in Mexico, it's only when they actually usually carry the remittances themselves, but they shifted to more formal channels. Hence, if you can, as I've seen as I've shown in the previous slide, there was a significant growth from last year, and Mexico defied the pandemic numbers of other countries. For example, they grew by 12% because there was a shift from informal channels to formal channels. And Mexicans from other diasporas or regions within Mexico that are more established in the U.S. So these are the older generations, for example. They were largely unaffected, whilst those who arrived recently, say in the past decade, with fewer social network, have been most affected. So there's a difference in the dynamics amongst Filipinos and Mexicans in the U.S. But just to highlight, Mexico sent, at least for the formal channels, they were sent electronically. And then in terms of the receive side experience, given that there's a surge in signups for mobile wallets and also having bank accounts, you can actually now digitally open a bank account. We saw that there is a continuing increase. However, cash is still relevant, particularly those in rural areas. Due to the conducive regulatory environment, I'm very much proud of what our government has done. Financial inclusion and adoption, digital adoption, will continue to increase. And I'm hoping it will continue even to the next administration. But there are still challenges to be addressed, if I would put it. These challenges are basically what we already know, building further infrastructures to support drive on financial inclusion, and consequently, obviously adopt to digital financial services. We all know that for those who are in the rural areas, particularly those who are far-flung, the challenge of accessing internet, which is very basic tool for you to access mobile wallets, for example, you need to have that mobile internet infrastructure in place first. So that has been, I think, one of the things that we need to address further, so we can further increase financial inclusion in the country, and also obviously digital adoption. On the side of Mexico, uniquely, cash is still king. 4 out of every 5 pesos, Mexican pesos sent, are actually paid out via non-banking institutions. So that speaks about their current situation, and also some of the challenges that they need to face. And one in particular, for example, is financial inclusion. As I've highlighted in my previous slide, about 30%, about 30% 30% financial inclusion, and about 32% have just made or received digital transfers in 2021. So that's quite unique about Mexico. In terms of us and what lies ahead, again, let me break it down into the customers and also the MSPs. What are we observing now in the current endemic phase? Senders, some of them are going back to sending cash as brick and mortar operations obviously resume in many of the host countries. However, if I would categorize this pandemic, it's actually a generational boost. We wouldn't be able to achieve these numbers or the shift towards digital sending of remittances if we haven't gone through this pandemic. In terms of, on the flip side, for recipients, we're only seeing continued adoption to digital receive methods in our own numbers, and which should be also true for other MSPs. The fastest growing service for payout is actually sending to mobile wallets and also to bank accounts, even to traditional bank accounts, which tells us that, again, this pandemic really boosted the use or adoption to digital channels. On the sending side, on the side of the service providers such as us, we see that digital is really now, and we will only further build on these channels. Like in the case of WorldRemit, we are mobile focused now more than ever. Now, we saw in the pandemic that the most popular channel is actually just most popular tool for you is really the mobile app. So we try to build on those on our infrastructures. No? However, we still maintain an basically omni-channel network, which means on the receive side, at the very least, we will maintain a cash payout network because it's still relevant. And this applies to many of our markets, receive markets. But in the future, or in the near future, we are already actually preparing for a digital heavy one. We are looking at building our own wallets. Many MSBs are already looking into other financial services. And obviously, these financial services are now being offered by certain players or many players through digital channels. So what are the challenges for us as we try to navigate our way through this uncertain future? First is, as digital money transfer companies, because we're coming from accelerated growth, the main question now is how do we actually sustain it whilst we are being cost efficient? As I've shared with you, because of the disruption made by digital money transfer services lowering down the cost, we also need obviously to address those cost efficiencies on our side. So we need to further build on these sustainable models for us to survive. Challenge number 2 would be identifying other opportunities and creating what's next. Now even that even the incumbents or legacies are fortifying their digital offerings and network. So how do we survive in a more competitive landscape? And the third challenge is further navigating compliance and regulatory ropes while obviously expanding our services and network. Money service businesses are highly regulated entities. We need to work with our governments or the regulators where we operate in to ensure that we still address the minimum security required of us, and obviously avoiding misuse or abuse of our platforms for illicit activities such as money laundering. And lastly, what are the opportunities and areas of interest for us? Some of you might already be thinking about how do you actually navigate through blockchains? What do you see about cryptos and other digital currencies, including those that are now being minted by our central banks, such as CBDCs, considering obviously what the current and the changing regulatory environments entail. We have been looking into it. We have been working with potential partners around it, and we're not alone. There's a changing perception about how you deal with these technologies, and I think it's just a matter of when, in my opinion, when we'd be able to adapt into these or include these digital currencies into our platforms. Another opportunity for us is we are already looking into other money transfer segments. So companies like us, since we already built the infrastructure on how to do money transfers digitally, we're already looking into other purposes. For example, we might accept payments. We are already accepting payments from abroad to individuals in the Philippines, for example. But we're looking into opportunities like business-to-business transfers or business-to-consumer transfers. So other applications of what we already have, basically. And lastly, other services beyond remittances. It's already being done. It's just that we need to obviously determine products that are not just sender-centric, but also for recipients as well. So we are closely working with our payout partners or our receiving partners, for example, in the Philippines, on how to inculcate or offer relevant services to their customers, which are ultimately our recipients. And with that, I end my presentation. Thank you.
Thank you very much, Mr. Earl, for highlighting some of the challenges in the digital remittance landscape. Indeed, the pandemic accelerated the growth in the adoption of digital financial services, even the speed of internet in the country. Indeed, sir, digital is now. And now we proceed to our next speaker, who will talk about remittances, as we all know, is migration's visible twin. With the advent of fast-paced technology and the rise of the digital age, how do we advance remittances and promote financial inclusion despite the adversities? We are grateful to have with us this afternoon an international expert in this field of remittances, migration, and financial inclusion, Mr. Pedro de Vasconcelos, the Senior Technical Specialist and Coordinator for the International Fund for Agricultural Development. A warm afternoon from Manila, sir.
Good afternoon, good morning for me, good afternoon for you. Can I just confirm that you see my screen in slideshow?
Not yet in the slideshow mode, sir.
I am in slideshow though. Okay. And now?
Not yet, sir.
I'll stop the share. I'll share again. Now? Can you confirm now?
Still waiting for the screen sharing, sir, to appear.
Okay. I'm having trouble. Now everything is frozen and I'm receiving a message from Zoom. So hello?
Hello, sir. Can you hear us?
Yes, my apologies. I'm trying to, when I try to share the screen, it sort of froze my computer. Okay.
Okay, we can see your screen, sir, but it's not in presentation mode. But,
Okay.
but perhaps we can do with this. Okay, that's perfect, sir. We can now
Okay,
see
perfect.
your screen.
Thank you, and my apologies for this. I hope I didn't take much time. I just wanted to start. Thank you so much for the speakers before me that introduced, I think, a lot of concepts. But I wanted to discuss a set of specific issues, and I think it's important to start. So, one aspect that we've noticed at the International Fund for Agricultural Development for a long time is sort of the misconception that exists behind remittances. So in front of you, you have what we call, actually, the questions, are these facts? Would you agree with what you're reading? That remittances are mainly used for consumption, the diaspora investment is what helps climate change, adaptation, that remittances are equal to FDI, ODA. All this might seem pretty natural, and you must have heard this. However, what I would like to say is the detail, or the devil is in the detail here. 75% of the remittances are used for daily needs, and 25% is invested. It is wrong to assume that remittances are just for consumption. This is something that sometimes is said and carried over. For the last 20 years, I've been hearing, and it is important to understand what they are. This is private flows. It helps families with their daily needs, and 25 is invested in specific ways that we will discuss. But this is what is important to understand. We often say that a lot of the climate adaptation is financed by diaspora investing. Actually, remittances surpass it by far. Remittances today is the highest amount for climate adaptation that remittance families, the recipients, use. We often say lowering the cost will increase the disposable income of receiving families. Well, not necessarily. The cost will trickle down. When you're sending 200, if it costs you less, well, it's more savings for the migrant. But that also doesn't automatically mean that you're going to send more on that. We often say that all migrants send money. That is not true. It's most of the migrant workers do, but we estimate this to be around the 200 million plus sending regularly money home. So these were just some of the aspects that I wanted to highlight. And of course, it takes us to the big figure. This is a big figure with lots of zeros, the amount of global remittances sent to low and middle income countries each year. This is since, at least personally, we've been monitoring this. This has just been increasing every year at a normal rate of 10%, depending on the years, but 10% on average. And during this session today of an hour and a half, this is the amount of remittances that will be sent. This is to convey that this is happening as we speak. This is not something at the end of the year. This is a reality. People right now are supporting their families with remittances, and this is what in an hour and a half in the global will be sent in remittances. And they keep going up. FDI, ODA goes down and so on. Remittances as counter-cyclical go up. When FDI and ODA come down, this is when they go up. And they're very steady. So it is important to understand that aspect. And it is a global phenomenon. It affects I know today we're talking a lot about the Philippines, but you can go to any country, low and middle income countries, and you will see that remittances are an important role. In fact, 80 countries, more than 80 countries, but around 80 countries have a remittances to GDP comparison greater than 3%. This is when we estimate that remittances matter, when it compares at least to the 3% of the GDP. And as you can see, it is again a global phenomenon. For most importantly is for IFAD, the International Fund for Agricultural Development and Promoting Rural Development, is that more than half of that flow, I put 50%, but it's more than half goes to rural areas where these flows count the most. It is by far the biggest inflow of foreign currency, of aid, or whatever you want to call it, that goes to rural poor areas of the developing world. So this is something to keep in mind. But beyond the trillions and the billions that we just discussed and we like and politicians like to bring forward, because it's that aggregated that is very impressive, this is the most impressive figure. This is the 200. This is what it means, what remittances mean for a family. This is the average of remittances sent to their families on a monthly basis or every other month. This is where the opportunity lies. When we're looking at remittances, we need to think about a family receiving this. How can we maximize this? Not the billions and the trillions, which an aggregate will, but this. And for that, we need to understand what are remittances? What is the phenomenon? These are private flows, we know. How much of the income of the migrants is? And for that, we need to understand that of the 200 million people that are sending, half of them women, other earning 75% of the Filipinos abroad. This is on average, in some cases is more, but on average worldwide, our estimations say that 75% stays in the country where the migrant lives. Only 15% corresponds to the remittances. That $200 bill, if we can say that in remittance bill, is 15% of their income, and 10% is either saved home, informally, or depending on the access that they have, but overall is 10% that is saved. That 15%, what does it mean on the other hand, back home? Well, in most of the cases, it's more than half of their income. In average, 60% of the remittance family's income. And with that 60%, what do they do? Well, 75, as I said, percent is on daily needs. What does that mean? Put food on the table, address the reasons of poverty that actually generated migration in the first place, buy medicine. And it's true that sometimes we need a new TV to connect to the world, or we might need shoes, or there's a birthday. But this is not the constant. This is not what remittances do every day. And this is a misconception that is staying now for a long time that needs to be clarified. The other 25% is what is invested in education. It empowers women, small businesses, for instance, clean water, sanitation, as I mentioned, adaptation. So this is what we believe remittances do. We like to say at IFAD that remittances support 1 billion people achieve their own SDGs, their own daily SDGs. And this is the reality that we've seen. Although we're not discussing today, that 10%, and I think it's relevant for the Philippines, that 10% that is saved is what we call diaspora investment. This is a different story, and we see that these are financial resources in sort of adapted financial services The Philippines has a great history on bringing that extra, that savings that is accumulated abroad to having invested back home. These are two different streams that need to be understood, because at the operational level, when you're trying to build mechanism, this needs to be in line. But if we go to the markets of remittances, we heard, I think today from our colleagues, new realities. Market has changed a lot. 10 years ago, we were looking at a map or a graph like this one today that only had really maybe the MTOs and some banks very inefficiently sending remittances. The ecosystem has changed extremely, I think. But I wanted to bring your attention to the access and use thing. Bringing the access, which we'll report, bringing the access is the MTOs, the money transfer organizations, the mobile network operators, the online mechanism. These are all the tools that more and more we're aware of, instead of other traditional institutions like bank MFIs or postal networks for that matter. But it is important to understand that they all have a certain advantage and disadvantages. So the best deal actually is to try to collaborate, because there's things that banks offer that others don't. And 10 years ago, the market was very simple. You might be a Western Union, you put cash on a counter in a Western Union facility. It has an agreement with someone, an institution in the Philippines, maybe a mom and pop shops, and it will go. This is the reality of one corridor right now of the market actors in from the UK for Africa, for instance. As you can see, there's a lot of entities that are working together, that can communicate, that can offer a more greater market, more competition. And this is what has been driving the cost down overall. You know, enabling environment has supported doing that, but this is mainly the reason to achieve SDG 10C of reducing the cost of remittances. Market competition is what is been the driver for that. And since it was mentioned before, I wanted to highlight just a little bit on what have we learned with COVID in terms of the markets. And rather than talking specifically about the market, we wanted to see from the user experience, the migrant worker and their families. And what we've seen during this lightning fast pandemic situation is that many lost their jobs, depending on what they're doing, if their job was qualified essential. So we saw some disposable income going down. People were not able to traditionally send remittances by going to a counter and putting the money on it because it was closed. So they had to find new ways of doing this. They had to cope, reduce consumption, tap into savings to be able to send when they could, and more switch to regulated and digital methods of sending money, not through a friend because travel was restricted. So all this really created new patterns and so on. There were some pre-existing enabling factors that allow some of people to send or to switch to digital. This was some of the aspects of the eKYC, those that had transactional accounts on that time, and those that were already converted to digital methods. For the others, this was just still an opportunity and a challenge, and there's been more incentives to push forward for the digital uptake of this mechanism that also needed to be on board. So many families and many migrants actually needed to receive also information, a better understanding. So digital literacy on how to do this has this changed this new pattern. If you look at the remittance families, it's a little bit of the same story. This is the first time that a crisis hit both sending and receiving side at the same time, where people were blocked. And it affected, of course, their income, that other 40% of their income, but this 60% for many of that corresponds to remittances were also affected. There were very low digital literacy or rates, and that had to be obviously addressed in record time for people to receive remittances. And we saw a dramatic change in that. There was reluctance before the pandemic to change to other means because it's normal. People are comfortable in the way that they're sending, but the crisis has pushed them. There was no options to do that, and this came along with this shift came along with new opportunities and of course challenges to be addressed. That involves not only new innovation models and new market players, but also the rules that govern this. So the enabling environment also had to change. There were some blockages in there and governments needed to take action. But if you can think, to summarize all this, is the learning curve and the change over the last 2 years has been dramatic compared to the past. And I think this is what you need to take home. I would like is to share with you a little bit of the IFAD approach, not to brag about what we're doing, but just to explain a little bit of the logic from a development perspective. And this is just to mention this, the program. We're present in over 50 countries in the world, so it is not really just located to some area or other. I think we have a lot of experience in many of the markets, and our theory of change, as we call it, in regards to this is very simple. Remittances is just the bubble at the surface of a lake. Is the lack of economic opportunities that pushes members of a family to migrate, that in turn send remittances to support their families back home. And this circle, if unbroken and where efficiency is not sick, will just continue. You can break it. You can achieve the mission, the initial mission of moving, sacrifice of moving away from your family to support them, and break that cycle, break that need, have it momentarily. An aspirin that kills the headache, not an aspirin that it is needed on a daily basis for the rest of your life, if I make that analogy. So here, if you can leverage, remittances allow you to leverage more than any other stage. And this is where with them, you can actually mobilize savings. There is funds now. You can create asset building, income opportunities, job creation, all these that actually will address the lack of income generating activities that again pushed for migration and remittances to occur. Today, I wanted just to discuss on the remittance side, what you see on your right screen, on your right side of the screen is about diaspora investment. I will not extend on that, but on remittances, when you think remittances and development, what you should keep in mind is access and use. Getting the remittances there efficiently, digitally today, much easier, better and efficient, and their use once received. Once they are there, how can you maximize them? So the first, what we heard today about the market actors is what we're trying to promote, more innovations in this, particularly in rural areas where it's more difficult to get, and digitalization has provided a great opportunity to do that. And once received, how you can link this with the real development impact of remittances, and I will just pause 1 second, is financial inclusion. That's what remittances really bring. We often think about the monetary aspect, how these funds would make development. It's a door for millions of unbanked people to get access to financial inclusion, and therefore from that be able to participate in the economy. I'm almost done with my time, so I would like is just to give you 2 examples of the country approaches that we've been having. But before that, what you see on your screen, these are the ingredients that you need to tackle in order to adopt as a policy or as a government in order to address remittances. If you miss one of those, you're going to be in trouble simply because something might not work and you might not act upon that. You need the good data. You need to make sure that there's competition in the market, a good enabling environment surrounding it, making sure that the access and the use of remittances is part of your vision. And more importantly, to that vision, you really need to think in terms of scaling up. How will this become the norm? How will this be able to be uptaken by remittance families? These are the crucial ingredients to achieve, I think, what we often say, remittances for development or maximizing the development impact. There's 2 examples that I wanted to share to conclude. And this one was in Asia with Malaysia and Pakistan, where we try to support the introduction of e-wallets to send remittances and also to be received in Pakistan and in Bangladesh from Malaysia. This has been very successful at the end of the day, but it started slow because the patterns of sending from people needed to be changed. And this is something that the industry will often tell you, or at least I used to say, that it's very difficult to change the mindset of a migrant that has a system that works, I think like anybody else. And I wanted to explain a little bit about that and then go into one insurance, but another product on insurance. But what we've seen in Malaysia has been extremely well. This is a private sector initiative that we've done with the entity Value, with AZ Paisa as well, and other partners. And to try to address price, convenience, and safety through an end-to-end digital mobile financial solution. The results have been fantastic and very exponential. As you can see, this was a very small project of actually $200,000 more or less with co-financing, but you can see the numbers. And what this has shown us is that there is uptake. The migrants saw convenience, saw use of actually convert to digital wallets to send their remittances. This also pushed their families to adopt that. And then it was much easier to link financial services, incentives to save through these e-wallets. As of today, there's also other partnerships that have happened in here with financial institutions that allow now to, again, bank even further those that receive remittances, savings, and insurance products that allow you for a rainy day. And I would like to illustrate on my last example, exactly that. During the pandemic, one of the projects that had to, as a mission to link the money transfer with an insurance product, more sophisticated, allow many people and I would recommend, since I'm going to share this presentation, to click on the video that you see. We don't have time to see it now, where you basically see how the insurance product linked to the remittances saved the day for many people that were sending remittances home that unfortunately could not send at that moment. That insurance allowed the families to keep receiving this flows and basically ride the crisis as we heard of it. So that's what remittances were able to do. I will conclude just to say remittances has been in the discussion for a long time, but it is now part of one of some of the biggest agendas in the world. Of course, it is in the SDGs. There is a global compact on migration at the United Nations level with 2 specific objectives on how to promote and maximize the impact of remittances, the objective 19 on remittances, 20 on remittances, 19 on diaspora. There's an International Day of Family Remittances. You will be all proud, many Filipinos here, that this is a resolution of the United Nations General Assembly that was championed by 5 countries and then 44, the Philippines being one of the sponsors of the creation of this day. The G20 has tremendously advanced in the big support for remittances, all these issues that we knew at the enabling environment that is above the heads of all this market and migrants. They're really looking into this. And since 80% of the flows come from the G20 countries, this is very good news. And next week, basically, International Migration Review Forum will review all this. So these are big agendas that are in there. And I would like is to make a call just to finish in my last 30 seconds. My apologies if I took a little bit longer. It is just to invite you to be part of this. If you're in this webinar, I think today it is because you think your job is might be related to this topic, or you might be very active in it. I will suggest that on this occasion for this year to participate in the IDFR campaign on June 16 by advocating for the actions or your views on this. It is important. My first slide was about misconceptions. This is the reason why a lot of this topic is so important, and webinars like today are still needed. It's because we are not aware as all the actions that we can all contribute. So I would just call you to take action as well on this day to make remittances count even more. And apologizing again for the extra time. I thank you for your attention.
Thank you very much, Mr. De Vasconcelos. Thank you, sir. And no worries, sir. We really enjoyed your presentation, and thank you for demystifying some of the facts surrounding remittances and for putting emphasis on how to break the cyclical pattern of migration by leveraging remittances, which are, we all know, private transfers, by the way, for the family's economic development. And we now go straight to our question and answer portion, since we are pressed for time. And we thank our participants, not only from the Philippines, but from Pakistan, India, Nepal, Sri Lanka, Tanzania, Tunisia, as well as Seychelles. We will now be entertaining questions from our online participants. Some of the questions have already been answered, so I think there are at least 3 remaining ones that are unanswered. One is from Anna Aguilar. uh, she would like to know about this disaggregation of the remitters, if there's an available uh, percentage of on how many men versus women are remittance senders. Perhaps we can ask Earl, Sir Earl, for if you have data based on your company's transactions.
It actually differs on a per country basis. No? In our case, for the Philippines, for example, we don't monitor the gender on a per transaction basis. But based on our experience, whenever we do surveys, uh, more than 50% are still women. It depends also on the country where we're doing the survey. For example, in the US, it's really a mix. But in regions like, for example, in Asia Pacific, particularly in Singapore, where there's a different mix of migrant workers or the types of workers that they're uh, in some categories, there are more women than men. So it really depends on what data you're looking at. But if we look at the Philippine data per se, there are available information through some of the government agencies like um, um, the PSA, for example. They run surveys on a periodic basis. If you want to know specific segment or period of that, we can probably refer to those kinds of surveys or information available online.
Okay, thank you, sir. Just a quick follow-up from Geraldine Mendez for Word Remit. What would be your suggestion for PH regulators so it would be easier on your end to comply? And would you be interested to partner with investment companies so that remitters have an easy access to investment products?
Sure, those are very good questions. First, on the regulatory side, uh, since we are a foreign-based company, we don't offer our services directly to consumers here in the Philippines. We work with Philippine partners such as banks and non-banks who are the ones directly regulated by the central bank, for example. So in my experience, I've been on the receive side as well. I can probably answer based on my experience. The moment that the regulators are willing to listen and be in tune with the vision of those that they're regulating, it's easier to do regulatory work. It's more of you guys just doing policing at the end of it all. But if you're able to listen and see the trends within the industry, it's really far easier for you guys to do regulations. I've worked with a bank. I've also worked with a mobile money service. Whenever we put up any a potential new service, for example, or a concern based on the partnerships that we have on the send side, the central bank is very much willing to listen. And so we're quite lucky in a sense because in the Philippines, the regulatory environment is very much conducive to these types of innovations or within the industry. So yeah, Philippine experience is one of probably the best ones that you can have when you put up a fintech company or you offer remittance services. But of course, you need to go through the regulatory regime. We are a highly regulated company. We need to avoid money laundering and whatnot. So yeah, the second question is it possible for companies such as WorldRemit to partner with financial companies like in the Philippines? Yes, it's very much possible. But I think it would be more efficient if we tackle this through our existing partners, because our existing partners are financial institutions anyway. So we've been talking with them about potentially offering UITFs, for example, in the near future. I cannot disclose obviously what the details are, but yes, we're speaking with our existing partners or potential partners, even beyond the traditional financial rails. We're speaking to blockchains as well at the moment, and yeah, we're exploring other opportunities out there.
Okay. Thank you very much, Earl, for that question. I think we have one for Senior Pedro. How can from Shalendra Karki, how can modern disruptors work on financial inclusions, an opportunity that traditional institutions has?
Yeah, it's an open question. And there's I think if you start thinking about who provides financial inclusion, what is the information that migrants need? I don't think I ever took a class of financial literacy on how to use a credit card. And I'm using one, and I'm sure everybody here has done the same. And I'm sure that they made many mistakes along the way that maybe they would have avoided if somebody not providing the service would have told you the pros and don'ts of what to do with that. So there's many ways. I think the public sector has a key role to play. And if I can just say, for instance, that in the work that we're trying to do when we're supporting the governments, in understanding the potential of remittances for financial inclusion. And it comes very obvious very soon that financial literacy is key. And you would be amazed about the amount of financial inclusion and financial literacy policies that are put it out there by governments today without mentioning the word remittances once. There's you go. This is how you can do it. You can have a holistic approach by understanding the impact of remittances, that people are receiving these flows. They are doing this out, sometimes outside the formal financial sector, but in many cases, the cash to cash. And they don't understand that potential that is existing today. This is not a fancy idea. It's happening. So having policies that take into account the reality of remittances and potential for financial inclusion would be huge. And the countries that are doing it, it works pretty well because they can foresee already problems ahead. They can see where regulation that affects remittances might affect the strategy on financial inclusion. I mean, so that's many ways. And in order to do that, you also need a lot of actors. You need the private sector, you need the civil society. Migrant associations have a huge role to play. We worked with many Filipino associations here in Italy, actually doing we taught them how to save, because we talk about investment, but if you don't know how to save, you're in big trouble. If you came for supposedly 3 years to Italy to support your daughter, but after 25, you're supporting your granddaughter because you couldn't plan, because you couldn't basically have the financial goals set, that's a problem. And this is where, for instance, diaspora associations have a great role. As you can see, all sectors really can play a role, but have a unified vision on the potential is essential.
Thank you very much, sir. Those are indeed nice points, specifically emphasizing saving as one of the building blocks, specifically as one of the fundamentals for a migrant to have. We have one more question before we end our question and answer. This one is for Professor Jeremiah from Geraldine Mendez. Is it still true that education is still the top consumption for remittance receivers?
Well, to answer that question, I guess the obvious answer is yes, especially for families with children, especially when children are still young. And of course, definitely going abroad is considered an investment. And then the directing of the remittance for our education is another investment in a sense. And I think, Mr. Moderator, there's another question from the chat room.
Since we're pressed for time.
Oh, we're pressed for time. Okay.
Yes,
So,
but we will collect all of those
Okay.
questions. Rest assured that we will fully document this. Thank you.
okay.
Okay, if yes, I will grant one more question since it's coming from Unlad Kabayan's Ma'am Maria Angela Villalba. She stated that good day, over the many years, over many researches, remittances trend always on the increase, and also in financial instruments that capture part of the remittances. What exactly does financial inclusion mean? The thing that stands between remittances and rural underdevelopment, and who is addressing this? Perhaps this question can I pose to all of the three speakers? Just very short answers to this. I know this is a long question. I would like just to pick your brains.
You mind synthesizing it again, because I think I'm afraid I've missed a bit.
Yes.
Is it on the chat?
Yes, it is in the chat.
It's in the chat.
Okay.
In the chat,
Okay.
yeah. What exactly does financial inclusion mean?
I have a very short answer for that.
Hmm.
Financial inclusion means more options to use your funds. That's it. we all have wallets with plastic. These are options. One is a better credit that can lead to something else. What families don't have today is options to use their funds. And this is why you cannot generate more wealth. So if you only is cash to cash and you can only pay for what you get and for what you have the money, in rural areas, it is a problem. You cannot plan for the next harvest and so on. So access to financial services, insurance, the trio, as we say it, is key. And remittances can do that. Very few other things can. So it is here, it is big, it is in sight, hidden in plain sight. And it's a fantastic opportunity to look at it like that and not be greedy and grabbing, oh, let's take that money from grandmother or my daughter and then put it somewhere else. No, let's leverage, let's harvest to give it more options. It will have a greater impact multiplied by the millions of people that receive.
Okay. Thank you very much, Sir Pedro, for that very sweet answer. Unfortunately, because we're pressed for time, my apologies to both our resource persons and to all our participants. But Maureen De La Cruz, we have noted your question as well. Since we don't have time left to answer more of your questions, rest assured that we will be collecting all of the questions that you posted in our chat box, as well as in the Zoom. And we will share the presentations. Be sure to drop your email, to send us your email in the chat box. And so to wrap up our discussions, I think we're really pressed for, I think this it's very short time, we should have a part 2 of this session. Okay, so moving forward, I am very pleased to have with us the Director of the Division for People and Social Inclusion of the United Nations Institute for Training and Research, Mr. Alex Mejia. Mr. Mejia holds a master's degree in Foreign Affairs from Georgetown University. Sir, apologies for the delay. You now have the floor. Thank you, sir.
Thank you very much. Congratulations on all the deliberations so far. And as I know that we are pressed for time, let me go straight to the point. On behalf of the United Nations and particularly of UNITAR, the agency that I represent, the United Nations Institute for Training and Research, congratulations to all the participants and the organizers of this webinar on remittances as inclusive economic growth for migrants, families, and their communities in the digital age. I was impressed to read about some of the comments from the participants, but I'm also very impressed by this product of teamwork. This has been the University of the Philippines and the CIFAL Center that we together manage in Manila. This has been also a great support of the Commission of Filipinos Overseas that we know for very many years. And for many of you, dear panelists and participants that took the time to come and listen so we can understand the power of remittances and how economic growth for migrants, families, and their communities is a top priority for nations like yours. Let me tell you in a very personal note, I come from Ecuador in South America, and in my country is exactly the same. If we were not to have the impact in our economy of the remittances that people from my country overseas send every single year, every single month, every single week to our coffers, life will be complicated. However, there is indeed a lot to debate on how to channel that, how to create a synergy between these flows coming to our countries and the ability to grow and to make our societies better. So today, you have heard very many things in that regard, and I simply want to add some words of thanks. And then I'm here now in the border with Ukraine in Poland, and I decided to actually take time from my meetings to come and join you, because I wanted to tell you that it is important also that we understand migration as a powerful positive force, whatever the cause. In the case of the Philippines is, as you have heard, multifaceted. In the case of Latin America, my country, Ecuador, is also multifaceted, but economic migration remains important. However, there is other type of migration. And here, from when I speak to you in Poland and nearing the border with Ukraine, this is forced migration. And I wanted simply to invoke this idea to understand that migration should not lead to these sometimes difficult reactions in society that border in xenophobia. Migration is to be understood as a positive outcome. Migration, orderly migration above all, and in the light of the Global Compact for Orderly Migration, it's an economic impetus that actually benefits our societies. If we were to understand that, I believe fully we will realize the potential of migration beyond remittances. But today, indeed, this is something that occupies our time, and it has been greatly debated. 31 billion in the case of the Philippines is something that indeed carries humongous potential. In the case of my country, which is approximately half, I see with my own eyes every time that I go and visit my family, how if remittances are to be channeled in the proper way, it empowers families, it empowers communities, it empowers the country as a whole. With that, again, congratulations to all the co-organizers. Thank you to all of you participants from many countries. And on behalf of UNITAR, the United Nations Institute for Training and Research, our appreciation to CIFAL Philippines, to Dr. Edna Ko and her team for making this possible. I thank you sincerely from far away, but with my heart being with you. With that, let me give you back the floor. Thank you.
Thank you, thank you. Thank you very much, Sir Alex. Thank you very much for your constant support to us wherever you are. We're very glad that you always find time for us here in the Philippines. And thank you to all our speakers for sharing your time and expertise with all of us in this fine Thursday afternoon. Thank you also to all our online viewers, both here in the Philippines and across the globe. This webinar on remittances was brought to you by the UP-CIFAL, headed by Dr. Edna Ko, the UN Institute for Training and Research, UNITAR, and the Philippine Migration Research Network. We hope to see you again in our future endeavors. Thank you very much from Manila.
Thank you. Bye-bye. Bye-bye.